Hello and welcome to this edition of Closing Trades right here in ET Now. And once again, for all of our viewers tuning in right now, wish you a very happy new year and happy it's turning out to be for whatever its sake on the back of volumes that we have clocked so far. It's actually not turning out all that bad, much unlike yesterday where you did have a quiet start and that huge amount of volatility. We managed to pick it up quite nicely, 140 points up in the green after what looked like a little bit of a wobbly first 1 hour. We managed to gain ground quite considerably. Infrastructure, FMCG, telecom, these are the sectors which are leading as we speak right now. And, it's quite interesting. The names currently sitting at the top. You've got a Maruti, which is holding up a solid 3%. And I must add here that the reactions to the monthly sales data, the, motor on December sales, that is, has been very, very swift because you did have that tumble on an Eicher as well earlier today. Or for that matter, even on an Escorts Kubota. M&M, of course, managed to beat the street estimates. A 2% uptick is what that stock is sitting on after an excellent 2024 in any case. L&T holding up very smartly. The Adani Enterprises, after a wobbly yesterday, excuse me, that's back in the green, about 1.25% right now. Asian Paints is holding up currently in the green. And Trend, Sun Pharma, DRL. So it's pharma, which was considered to be the safe haven up until yesterday. That's actually seeing some profit taking coming in. It's pretty lively, to be fair, within the broader end of the market as well, and pretty unusual movers out there. And IRFC, which is holding up almost 5% right now. IRB Infra is currently up 3.5%. There's Muthoot Finance, Kalyan Jewelers. Those are the stocks which are actually holding up quite smartly as we speak right now. Of course, our exclusive sources are telling us that insurance companies are eyeing a very steep hike when it comes to commercial property premiums. The hike in premiums could be by about almost 80% starting today, and the revision is going to be driven by reinsurance pressure. And you can see that huge spike up play out on those insurance names as well. Karur Vysya Bank, for them, the total deposit uptick has been about almost nearly 16%. Advances uptick of about 14% on a year-on-year basis. That stock is well holding up quite nicely by about almost 4% as we speak right now. But let's welcome our chartists and figure out whether these gains are going to sustain come tomorrow when everyone's back to business.
Well, certainly, Aisha, because some of these pockets, specifically from the fertilizer pack, they are known to be very volatile counters. But today, the news that Aisha was just mentioning, that DAP procurement and the higher subsidy has got an approval from the cabinet. That's as per our sources right now. And these stocks are definitely moving in trade. And this hike in the subsidy is happening after 4 years. So let's try and find out that what does it mean for all these companies. And with this, let me welcome Deepan Mehta, who is joining us on the show right now. And even Naresh Mirani is also here with us. Very good afternoon, gentlemen. Thank you so much for your time. And Deepan, first up, very happy new year to you and your entire team. But help us with your take on the fertilizer counters. How do you see this hike coming? And any stock that you like will be the biggest beneficiary of this hike, which is now seen to be getting an approval from the cabinet?
Good afternoon, and thank you for your best wishes for the new year, and happy new year to the entire team at ET Now and all your viewers. It's going to be a great year. Coming to your question about subsidy increase, I think it's much needed because the soil composition also needs the adequate amount of DAP and other phosphatic fertilizers. Obviously, the biggest beneficiary of this is going to be Coromandel International, which is India's largest DAP and phosphatic fertilizer manufacturer. And I think it's a step in the right direction. Generally, I think that fertilizer companies are not created great value. They are great trading opportunities because of a lot of government interference and the effect that monsoon has on their sales. But by and large, I think within the entire space, we are quite positive on Coromandel International. And that's one company which has scaled up its business well. And the most important thing in the DAP business is backward linkage to get the right kind of raw material, because those are generally in short supply and a lot of price volatility is there in those raw material costs as well, which Coromandel has been working on.
All right, so that's the take coming in on the fertilizer counters. But sticking with this big story, let's get in more details, as we have been telling you that the Union Cabinet today has approved the higher subsidy for DAP. Let's get in more details on this one from our colleague Prakash Priyadarshi, who is joining us right now. Prakash?
The Indian Cabinet meeting has concluded, and we are learning from our sources that the two important decisions have been taken. The first one is with regard to fertilizer sector, where it has been decided to provide additional subsidy amount to the companies for the procurement of DAP. A very significant development coming in, as you are aware that the DAP prices have increased significantly in the international market for quite some time on back of multiple reasons, of course, due to disturbance on the routes and weakening of rupees against dollar. And therefore, companies have been requesting government to either allow them to increase prices in the domestic market or increase subsidy amount. Therefore, taking all these factors into account, the government has decided to increase subsidy amount in order to offset the hike in prices in the international market. Of course, this decision will benefit farmers as well as companies. You're given to understand that the government has decided to increase subsidy amount by rupees 150 to 200 per bag. Along with that, we also given to understand that the government has decided to extend PM Kisan Fasal Bima Yojana with some modalities, where it has been decided to provide some relaxation to the farmers to get maximum benefit of this scheme. Back to you.
Okay, thank you so much. That's my colleague Prakash just confirming that story. In the meantime, let's just try and understand what the market construct today is looking like. Some of those auto names are making a bounce up. There's L&T, Bajaj Finance, Adani names are looking good. Even iShares, actually, after a weak start and reacting to its monthly sales data, it's managed to showcase quite a bit of recovery. There's Tata Motors also holding up in the green. Axis, HDFC Bank. It's looking like a lively market for sure. But Dipan, hi, good to be speaking with you as always, and wish you once again a very prosperous and healthy 2025. Tell me, what are the sectors to bet on for the year ahead, or do you think it's going to be much more stock specific than the latter part of 2024 for us?
Yeah, good afternoon and Happy New Year to you as well. I think the first half of 2025, the first quarter will be quite challenging. There are two major events in our opinion. One is the Trump presidency and how they are going to react and make changes in the first few weeks of their presidency. That's going to drive a lot of global flows, global markets. So we need to be very attentive of what is happening over there and what impact it has on our economy and our companies. That is point number one. And secondly, an earnings season will start pretty much soon, in a couple of weeks or so. And towards end of January, early February, we'll have a clear-cut idea as to how the most important quarter, in my opinion, of the year, the one which has the festive and the marriage season, how that has played out for consumption stocks. So I think these are two important events or trends to look out for in 2025. And all I can say is let's hope for the best, because last quarter was pretty disappointing, September quarter that is. And let us see if there's a mild turnaround in December quarter or the continuation of September quarter. And that actually will determine the trend for the market. I think the market at present is on it can go either which ways. It can rally back up to its all-time highs or correct further from these levels. And it's just waiting for corporate numbers and what is happening in the US on Trump presidency to decide which way to move.
In fact, just this morning, we were chatting with Nilesh Shah from Envision Capital as well. He's been tracking IT as a sector whole hog for many years now. And here's what he has to tell us about not just IT, wherein he believes that it's actually time to move out from the large cap IT plays and, stay put with the mid cap IT names, the more niche companies. And at the same time, he talks about as to how staples is not really the go-to sector right now, but the premiumization trend when it comes to consumption is definitely here to stay.
There are better opportunities even within the IT services or in the overall IT space itself, which you need to look out for. So you have the tier 2 companies which are into ER&D, okay, companies which are product companies on the BFSI side, the banking, financial services, which are essentially either having products or have partnered with hyperscalers to implement their products for the Fortune 500 companies. That's really the segment to focus on. Yeah, I mean, there'll be companies who are going to now implement AI solutions for Fortune 500 companies. that's really the space to be. And because these are smaller companies, for them, any shift in IT spending will mean a lot, versus that for the big guys who are already multi-billion-dollar companies, any shift in spending will not be material for them. It won't move the needle. The growth in the BPC segment has been a tad lower, and especially in terms of the outlook. The outlook is not as strong as what one expected it to be, but I still believe that's a short-term phenomena. It's a bit of increasing competitive intensity. A lot of the private players, smaller players who are well-funded are pretty much out there splurging in terms of their spending on advertising and customer acquisition, which is impacting margins, impacting growth for the leaders. Second is channel mix. Clearly, many of them have relied on the general trade segment, versus that quick commerce has essentially come in and pretty much stolen the thunder. And I think most of these product companies are trying to adjust or readjust themselves. Even I think modern trade on the offline side has been struggling and finding it difficult to cope with the competitive onslaught of the quick commerce space. So that's in turn impacting the product company. So I think it's a bit of several things playing out, but I probably think maybe 2 or 3 quarters from now, they should be back onto a strong wicket.
All right, so that was Nilesh's take on the select counters and sectors as well. But with this, it's time to slip into a very short break. Viewers, don't go anywhere. We'll be right back.
Back with closing trades right here in ET now. Let's just revisit where the closing trades are settling in at. And not bad after a bit of a chop and churn and a very quiet start. We finally have made it to the green, about a 0.5% uptick. Of course, you know, the volumes are not going to be as gung-ho, perhaps a little more than yesterday's, because there will be that crowd who would want to sort of beat the rest of the crowd once everyone gets back to business, hopefully by tomorrow. But having said that, just going by the FII flows, both yesterday and the DII buying, which kicked in yesterday, it doesn't seem like the flows are, you know, traditionally what we've seen at the fag end of the year or start of the new year. But yeah, today should be better than yesterday. Autos, they are definitely the ones which are making a comeback today. But so far, Srishti, other than M&M, it's been a disappointing sort of, you know, scorecard from Motown for December sales, right?
Well, certainly, Aisha, and specifically when we look at the numbers coming in from Bajaj Auto, because there we have seen and we have been reporting as well how the company has been taking the lead in the electric two-wheeler segment, but a bit of a disappointment indeed coming in, because on a month-on-month basis, that's a fall of 23% in the sales data, and definitely the stock is reacting post that. But even a disappointing set coming in from Escorts as well, because the expectations were quite higher, specifically from the tractor division, but case in being for Escorts, 39% decline on a month-on-month basis is what we have seen. But in the similar segment, look at the numbers coming in from Mahindra and Mahindra, and that's what we highlighted for our viewers as well, that not just have good hopes or expect good numbers in the tractor division, but in the automotive division, despite giving no significant discount, Mahindra and Mahindra could surprise, and the company has done even better on that front. But Maruti Suzuki, I believe, is the clear winner today, because it's one of the top gainers in Nifty 50, because the numbers were significantly higher, and that's quite a trend that we have seen for Maruti Suzuki, because in the year end the company really pushes its inventory, and 1.8 lakhs of unit is what they have pushed in the wholesales data. So that's about the auto sales scorecard. A bit of a mixed bag what we are seeing right now, but with this, let's get to our techies then and try find out that any stock is standing out at this point in time or not. Let me welcome Aditya Agrawala, Head of Research Investment at Invest for Edu. Hi Aditya, firstly, Happy New Year to you and your team. Help us with your take on the autos up front, because it's a couple of counters, Maruti, M&M leading it from the front. Any other stock that is making on your list?
Hi, Srishti. Good afternoon. Thanks for the show, and Happy New Year to you and the entire team of ET Now. But definitely, there are pockets within, I believe, autos which are looking good. Mahindra definitely tops of the list within that pack. In fact, I have a buy recommendation on Mahindra for a target of 450. For a target of 3,210. Apart from Mahindra, I think Tata Motors and Ashok Leyland also look interesting to me, because Tata Motors again entered into a good consolidation phase. The risk to reward is in favor of going long at current levels. There is positive divergences that I see with respect to RSI. Could be a slow mover, but I guess it's a good time to latch on to Tata Motors at current levels. Maybe put a stop loss just around 710 on the downside and look for a target of at least 850 to about 900 on the upside. Ashok Leyland, I think, is also one stock which should be on traders and investors' radar. At current levels, I definitely think it ticks all the check boxes, and one can definitely look at adding position here for a target of 240 on the upside. Place a stop loss somewhere around 210 on the downside.
Dipan, what are some of the themes that you've been working with in the market? I mean, of course, it's been a rough and volatile patch since October, like we've been marking, or even before that, actually, for some of the mid-cap and small caps in particular. But having said that, with all that's lined up in the year ahead and in the month of Jan as well, all stacked up with Trump taking over, the earnings season, then the budget, what would be your sectoral biases?
So I think banks haven't done well last year, and this could be the year where there could be improvement in liquidity, as also interest rate cut, and maybe, although NPAs may inch up a little bit, the volume of business also could pick up if the overall economy starts to recover, and valuations are still kind of reasonable over there. So I think it's a good trading opportunity within the banks, especially tier 2 PSU banks. I'm more positive on them than the private sector banks. But that's more of a kind of a short term, or maybe a few month, 1 or 2 quarter type of a play. In the medium to long term, I want to be underweight banks because it's becoming a bit of a red ocean, and the cyclicality also has increased, and the gap between the PSU banks and the private sector banks has narrowed rapidly, and that's not reflected in the valuations. And there are competing products, so the low cost deposits which the banking industry was enjoying for so many decades, right from inception, those are under a bit of a threat because of mutual funds and because of equity markets and entire financialization which is taking place. So in summary, I think there is a trading play, trading opportunity in the banks, but medium to long term, I'm not that hopeful.
All right, but now let's talk about some of these pharma counters as well, because of late, this is definitely this sector is definitely doing well. You talk to any technical expert or even the fundamental experts believe that pharma is really in for a good up move. And Naresh, let me come to you, because just yesterday, I remember you were putting and discussing about Apollo Hospital, and that stock actually is doing well today. But let's revisit your call on Apollo Hospitals and any revisions in the target price at these levels?
So Apollo Hospitals is finally coming close to that breakout point of 7,400. For the last almost 1 month, there have been multiple attempts around 7,400. The all-time highs are at 7,550. This could go all the way towards 8,000 levels or higher in the short to medium term. So looks positive, and it has not done as well as the other smaller hospital names have done. So it could take leadership in the sector. In terms of pharma, we've seen a good 10-15% move in a lot of stocks, whether it's a Lupin or a Laurus Labs and other names. So some bit of a pause over there. But Dr. Reddy's and Sun Pharma, the two largest weights in the index, still look interesting at current levels as well as on dips.
What's your sense on pharma? Because, we've seen that entire CDMO play is something that the street is quite bullish on. But do you think there is more, meat to this rally in pharma, which has begun for the last 2 months at least? Dipan?
Oh, sorry, I didn't get the question. Is there?
No, I just wanted to understand whether there is, more steam left in the pharma rally, which is currently at play for the last 2 months at least. The street is quite excited about the CDMO plays for sure.
Yeah, that's right. I think and pharmaceutical shares have done very well over the last year as well. I would say that a lot of them are well discovered. They're kind of well priced as well. And, they have had 2-3 solid quarters of very good numbers. So I don't think it's like a moving train. I don't want to really enter in these stocks at these levels. But 2 stocks come to mind, usual disclosure we and our clients are invested. One is Sun Pharma. I think it should be part of a core holding of every investor because of the kind of strategy which they are following. And mind you, it could have a few soft quarters, but the kind of strategy and vision the management has got in terms of developing a specialty portfolio will pay off very rich dividends in the longer term. Another company which we are watching on our radar, and we have an investment in it as well, is Kaplan Point, because of its kind of strong position in the Latin American market, and also making very good progress in terms of US sales as well. So these are the two good companies, in our opinion, within the pharma space. But right now, I think with the way the rally is taking place within the pharma sector, it's better to just wait and watch. Existing investors can remain invested, but from a fresh investment perspective, I want to see the December quarter numbers before I make the judgment call.
All right, so those are the top bets at this point in time. But Deepan, talk to us about the real estate pack as well, because I was just seeing the index that has performed really well for itself, more than 30% gain in the calendar year 2024. And just a while back, we also have a report which is actually saying that Mumbai market has registered its highest ever registration in calendar year 2024. The sales have been quite robust, and going ahead, the potential rate cuts are likely to improve the sales in Mumbai going forward. But given the kind of a run-up that we have seen in these real estate plays, specifically the ones focused in the Mumbai market, Deepan, any stock that comes to your mind at this point in time?
No, I think that the real estate stocks are pretty well priced, and the kind of strength which we have seen in the real estate market, Mumbai and rest of India as well, is really quite surprising. I do understand that the real estate market is on an 8 to 10 year kind of a positive phase, but even within that, there could be a few soft quarters which have not yet come, and sales remain pretty much strong. And more importantly, we have seen that the net asset values are growing steadily quarter after quarter because of new projects or higher values in existing projects and good sales taking place over there. So as an industry, it is on a solid footing. Balance sheet quality is the best it has ever been, and companies are focusing on cash flow and collection, which is very positive. So the return ratios also tend to move up. But look, I think these stocks have rallied significantly. And although I'm not selling any of the real estate stocks which we own, I don't think these are levels to buy to get a very strong outperformance.
Okay, Deepan, great to have you in the show, and we'll chat again soon. Let me just get in some closing trading ideas as well. Naresh, what's on your list?
So continue to like Jubilant Foodworks. The stock has again made a new 52-week high today. Clear outperformer in the sector as well as in the markets right now. So looks like this could continue momentum for the next couple of sessions. Stop loss at 728, target price of 750 for BTST, and could be 800 in the short term.
Right. Aditya, what about your stock ideas?
I've got a couple of them, Aisha. The first one is Mahindra. I spoke about it. Through 3210 is the target, 3000 is the stop loss, on the verge of a breakout from a downward sloping channel. The second is Hindustan Petroleum. In Petro, I think it's poised for a big up move. So at current levels, there will be a buyer for a target of 450 on the upside with a stop loss at 394 on the downside.
All right, so those are the closing trades coming in from both of our experts. But let's also talk about some of these gold finances, because of late and lastly in the last couple of days, Naresh, stocks like Muthoot Finance and Manappuram have actually been showing strength. Any stock that stands out amongst the two, which one will be the preferred bet, or at these levels, will you suggest to like enter afresh?
So I've been recommending Muthoot Finance, and this has been the strongest name in the NBFC space, continues to make new all-time highs. Even when the markets were correcting, the stock did not really see a correction, has done well. So still, this remains a favorite in the whole pack. Could head up towards 2300. So even at current levels, one could actually buy in momentum with a stop loss at 2180. Manappuram, given that it keeps getting into derivative band and high volatility and gap downs, is something which I would in the near term avoid, but the longer term structure could change if it sustains above the 210 to 20 mark. So for now, Muthoot Finance looks the best in the two names.
Top pick when it comes to the gold financiers. We're going to take a very quick break, but come right back. We'll continue tracking the last half an hour of trade for the first day of the new year. Welcome back to Closing Trades. Looking at the market
markets, we have actually given up some bit of a gains from those higher levels, but Nifty 50 is yet again holding above that 23,700 level. Let's see that whether this particular level is being respected or not, but it's Nifty Bank just a while back, which was having more than 300 points of gain, is now seen to be losing a bit from those higher levels, but still in the green. But it's some of these auto counters that we have been highlighting that are doing pretty well for themselves. Some bit of a recovery in stocks like Bajaj Auto is what we have seen. And other than that, it's some of these metal counters off late, because Hindalco was anywhere not doing well today, but it's Tata Steel, JSW Steel. I think these stocks are also seeing some downward pressure right now. But with this, let's move on and let's welcome Pashupati Advani joining us on the show right now. Hi, Mr. Advani. Very good afternoon. And first up, New Year greetings to you and your entire team. To this fresh start of the new year, help us with your outlook on the markets and which are the big themes that you're tracking at this point.
Well, I'll tell you one thing. First of all, sorry to change the subject slightly, but 1st January, I think we're one of 3 markets in the world that are open. So the sooner we join the rest of the hundreds of other markets, the better it is. If we take a well-deserved holiday for our people, because 31st for most people is a tough time. However,
we hope that, Aisha, we also hope that the exchanges and the regulators listen to us.
Well, all I want to say is this is our plea every December end, and nothing happens. The sooner we make our peace with it, the better. At least it's not extended hours or Saturday trading, right, Pashupati? We can still be okay with 1st Jan, I feel.
That's true. But I mean, going back to the markets, somebody, I've just been reading which are the sectors that have actually been hit and not hit. Okay, so one is the auto sector is down in the year 2024, and I'm one of these believers that you should look at sectors that have not done well and see if there are any jewels in those. So one is autos. We do see that there is pressure in auto sales, so I think there's still a little bit of time before you go into that. The other ones that have been beaten down are oil and gas, and to some extent, and energy and commodities. So I think this is the year of when those are actually going to be the winners. And to some extent, the PS public sector enterprises and public sector banks also, which have been hit. So those are the ones that one should be looking for jewels within those sectors, because they're the ones which are 10, 15, 20% off their highs. Overall, I think our market is fine. Though I am seeing flows going back to the US, because there's a lot of optimism with Donald Trump coming to the White House that he's going to be good for the markets. So I think there is money flowing back into the States. So that's not good for the rest of the world, I'm afraid.
All right, so that's the outlook on the markets and the sectors that you're tracking at this point in time. But what we are seeing is that some of these metal counters are losing that shine. So Mr. Pashupati, if you can help us with your take on the metal pack, because of late there was a lot of hope that was building in with the China reopening and the growth triggers there, but all of that is seen to be fading away. So any outlook to share on this sector?
Well, I think that one should be looking at. Obviously, they've been hit. I think that sector has been hit. Almost 20% last year from the highs. Okay, so 17-18% from the highs. The metals have been hit, but at some point they're going to turn. Now, whether it's going to be from a Vedanta, or whether it's going to be Hindustan Zinc, or that's what we need to look at, because we do need these metals for our construction. We do need these metals for our roads. So I think there is use for them. There is end use. And I think that's what's going to turn it around. Steel, we are afraid of what's going on in China, but I think there is still a slowdown in China. And again, it depends on what Donald Trump does with them, and what he does with the general public, and how he allows China to enter, and whether they're allowed to make money in the US again. So again, a lot of that we will know in policies in the month of February, which will give us direction as to how we're going to do for the rest of the year.
Pashupati, any interesting ideas that you came about in the month of December since we've chatted? Anywhere where you may have, added more positions or even bought afresh?
Well, actually, I just wanted to say one thing. Even though the currency of India seems to be getting weaker, which is of that I think is the game changer, and that is actually the main thing we need to be looking at. I am not particularly bullish on the IT sector, and the IT sector has only gone down 5-7%. So I think that that's a sector that definitely will go down. I'm very light. I've been selling out my positions in IT because I actually don't think that it's our Indian IT companies are going to be able to make. And now with this H1B controversy that's been stirred up in the US, it's going to be even tougher for them to do business. So I actually think that the IT sector should be minused, if you know what I mean. So yes, lighten up. I think you're going to get opportunities and definitely sell off shares in the IT sector.
All right, but sticking with the IT then, there's been a lot of chatter that is going around with the H1B visa, as President-elect Donald Trump will take the charge soon. So let's go across and listen out to the latest commentary coming in on this front by him.
And I've always felt we have to have the most competent people in our country. We need competent people. We need smart people coming into our country. And we need a lot of people coming in. We're going to have jobs like we've never had before.
Right, so for now, it seems to be on the positive side that they need a lot of people coming in. So let's see and track more reactions there. But getting back to the markets, Aditya, what's your take on some of these metal counters on the technical front? Because we just had Mr. Pashupati's take on the fundamental side. But for today, stocks like Hindalco, Tata Steel, they are reeling under pressure. So help us with your take. But before we do that, let's go across and listen out to the cabinet outcomes coming in.
साथियों, इस पूरे पैकेज की कॉस्ट करीब 3,850 करोड़ रुपए की आएगी और ये आप अगर देखोगे तो एक क्लियर कमिटमेंट है पिछले 10 साल का। देखो अगर आप इन 10 सालों में कभी भी किसी भी तरह के डिसरप्शन आए, चाहे कोविड का डिसरप्शन आया, चाहे वॉर का डिसरप्शन आया, किसी भी डिसरप्शन में प्रधानमंत्री श्री नरेंद्र मोदी जी ने किसानों के ऊपर बोझा नहीं बढ़ने दिया। उन्होंने वो सारा बोझा सरकार के कंधों पे लेना उचित समझा और इसका एक स्पष्ट अगर डेटा में देखें आप तो 4 से 14 में सब्सिडी फर्टिलाइजर्स की जाती थी करीब 5.5 लाख करोड़ 4 से 14 में, 2004 से 2014 में। 2014 से 24 में ये करीब 12 लाख करोड़ हो गई, 11.9 लाख करोड़, यानी डबल से भी ज्यादा सब्सिडी इन 10 सालों में किसानों को फर्टिलाइजर्स पे दिए और इसका बहुत ही अच्छा परिणाम भी आया है। देश भर में जहां पर भी जाए हम, अभी हाल ही में महाराष्ट्र में काम करने का मौका मिला था, तो वहां किसानों से जितनी भी जगह बात करते, हर जगह किसानों का ये बहुत अच्छा एक इनपुट आता, फीडबैक आता कि सब्सिडी मतलब फर्टिलाइजर का प्राइस मोदी जी ने बढ़ने नहीं दिया। दुनिया भर में प्राइस कहीं पर भी गया हो, लेकिन वो एक्स्ट्रा बर्डन मोदी जी ने किसानों पे नहीं आने दिया, वो बर्डन सरकार ने अपने कंधों पे लिया। मोदी जी ने ये क्लियर कमिटमेंट किसानों के प्रति दिखाया। ये साथियों 2 बहुत बड़े फैसले आज लिए गए और अगर इसको हम देखें तो ये एक पूरी सीरीज है। अगर ये सारे फैसले आपके सामने जो रखे हैं, ये फैसले जून में तीसरी टर्म प्रधानमंत्री श्री नरेंद्र मोदी जी की सरकार बनी 3rd टर्म के लिए, उसके बाद के फैसले। आप इन फैसलों में क्लियर पैटर्न देखेंगे। ये पैटर्न है किसानों के जीवन से जुड़े, किसानों के खेती से जुड़े हर एक एस्पेक्ट, इनपुट से लेके आउटपुट तक।
All right, so that's the cabinet briefing that is underway, but big announcements coming in on the subsidy because cabinet has given its nod for extra subsidy allocation of 3,850 crores is what he's been saying, as well as cabinet has approved the DAP fertilizer subsidy, and all in all, there has been an allocation that is being made to PM Fasal Bima Yojana of close to 70,000 crore rupees till 2025 and 26. So those are some of the announcements that we are still tracking, but all of these fertilizers counters have been doing well. Stocks like Deepak Fertilizer, some of these companies from the government side, as in RCF and NFL, are also doing pretty well right now. But Aditya, coming back to having your take on the metal pack, because Hindalco is one of the top losers. It's Tata Steel, JSW Steel, they're also joining that downward move. So any stock that you believe that could be in for some more pressure from these levels?
I think the one stock which could be under some more pressure, Srishti, is actually Hindalco. But again, I feel majority of the correction in these stocks are done at current levels. I don't see an excellent risk to reward in going short, either in Tata Steel or maybe Hindalco or JSW Steel. If anything, give it some time. I preempt a short covering rally, especially in Tata Steel. At current levels, it offers an excellent risk to reward to go long with the stop loss just around 134, 135 on the downside, and you can easily test levels of 145 to about 150 on the upside. So I would like to play a little contra here within the metal pack, just for a trading bet, not for a long-term bet here, and just see how these stocks perform over the next few trading sessions.
Okay, that's that on metals. But just want to check in on IT once again and see where the Nifty IT pack is currently at, because for the last 2 days, of course, we've seen that the IT pack definitely has been taking quite a bit of beating. Today, of course, some of these stocks are making a little bit of a bounce. But Naresh, on the reading of some of these mid-cap IT charts, a KPIT, persistent, emphasis, etc., tell me, what are those indicating? Whether they will continue to be in the bull run while the large caps lag, or is it going to be across the board selling that you sense?
So the mid-cap ones have rallied quite a bit over the last, say, 6 to 8 months. If you look at a persistent, it was at 3,500 back in April to June. Now the stock is closer to 6,500. So it's almost gone up, almost near to 90 to 100% move. Looks like a pause in the making here. Same is the case with Coforge. The stock on that big gap down was at 4,500. Now the stock is at 9,500. So in the last, from May to December, the stock has gone up more than 100%. So these names could take a pause. Similarly, a KPIT tech has not gone anywhere. It's been sideways, so that may not correct. But going forward from here on, the larger names could see whatever interesting bounce back trades. So any further gap down on bad results, that would be the time to buy the larger names like Infosys, TCS, Wipro, and maybe even HCL Tech, which has already rallied a lot. But I would still go with Infosys and TCS as good bets in the segment on any other correction from here on.
So that's the take coming in on IT. But Mr. Pashupati, any take on stock like Trent, because that has been the star performer of 2024. Yes, we have been chatting about the growth plans of the company and how the company specifically with the Zudio outlook has been doing for themselves. But given the kind of run-up and the valuation they still hold, any take coming in on Trent? Are you also one of those who still like the stock even at these levels?
Trent has been a great performer simply because it's been consistent, and I think that it is a visible listed proxy on the growth of India. So I think people will continue to come in. The Tatas and Trent is Noel Tata's main company, his original company. So I'm sure he'll get, even within Tata Sons, it will have a positive bias in terms of investment and in terms of strategy going forward, because he knows that company better than any other. So I think that it's not that it should be bought or sold, but it is part of the market. And I think if you wanted to come in and you wanted to be involved in the FMCG space, this would be a good place to come. And certainly when you compare it with, let's say, a D-Mart, which is similar but different, at least you've got one more player to compare it with. And I think Trent gives a box is par for par with that in terms of the way things are going.
We say cart because there are no more boxes, right? It's always add to cart, and that's something we're more familiar with nowadays. But Pashupati, since we're talking about retail, what about these online platforms, Swiggy, Zomato? Do you have both in your portfolio, or do you think Zomato is going to be, or rather continue to be, the out-and-out winner?
No, I think these four new wave stocks that came actually to market at the same time. Swiggy, of course, came later, but Zomato, Policy Bazaar, Paytm, And they've done well, and they continue to do well. And I think they came to the market at the same time. So I think that it's been interesting times for them all. I'm sad because I missed the Paytm. I mean, I was in it and out of it too soon, and then missed the real move up to the 900 level. So that's my mistake. But I think I caught it right, but I didn't.
Oh, okay.
There are new players coming who are going to try and pick away, but I think it
seem to have snapped that line. But Aditya, I saw you smirking as well. What's been your reading on the charts, or did you make the same mistake like Pashupati, got in at the right time but got out too soon?
It's not only with Paytm, Aisha, it happened with Zomato as well. Probably picked it too soon and then exited also too early, having to miss out on major part of the rally, I would say. But yes, I would agree with him. These players are here to stay. If I just look at the chart setup, who would have thought Paytm at just from 300, 350 to what it is trading right now, 1100 would come to. I think it still has up move left. Give it some time. Not at current levels. Maybe if you get it somewhere around 900, it's still a very good buy, I believe, and can test levels of 1400 on the upside. Nika is something which is looking interesting to me within this space, has underperformed big time. I think there's good buying that I'm seeing at current levels in the stock. Can see a decent upside from here on, maybe 200, 220 on the upside can also be seen here, which offers an excellent risk to reward as well. On the downside, 150 is a good support area.
About Zomato, around 270 thereabouts, is that a good buy, or would you pick Swiggy clearly?
No, I would avoid both of them. Aisha, at current levels, Zomato and Swiggy. I think there's a bit of a correction which is due in both the stocks, and especially Swiggy. I think once the lock-in ends for 6 months, you will see a lot of people who had bought it in the unlisted market come on the floor and sell maybe. So that can have certain pressure on the stocks. I would avoid both Swiggy and Zomato at current levels. On declines, yes, I would look to buy Zomato rather than a Swiggy.
All right, so that's the take coming in on these counters, and definitely big targets coming in on Paytm by Aditya. 1400 is what he's looking at, almost like 40-50% uptick even from these levels. But getting back to some of these other counters then, wherein stock like Bajaj Auto is also reeling a bit under pressure. And Mr. Pashupati, just wanted to have your take quickly that given the space and the kind of performance that we are seeing from the two-wheeler counter specifically, definitely stock like TVS Motors, Bajaj Auto, they have also corrected from their higher levels in 2024. Any stock that is giving you a valuation comfort at these levels? Would you be a buyer in any of these two-wheeler names?
See, honestly, I think that the two-wheeler space is a little bit crowded right now, and buying seems to have been stopped at the retail level. It's slowed down. I think it will come back, but I think that all these stocks have to come back first. Then we have to see two-wheelers going out the door, and then that's the time to go back into them. So right now, I'm being a little cautious on the two-wheeler sector. And, the only one in the auto pack that seems to be doing well is M&M. And I think that it has tractors, it has other things as well. So, and it has a vehicle that is different from everyone else, which seems to have, has its own following. And to some extent, Enfield. So those two have sort of been a little bit of a differentiator from the rest of the pack. So let's see what happens.
Okay, on that note, let's get some BTST trades as well as we begin the countdown to wind up the first trading day of 2025. Naresh, what's on your list?
So two names which are hitting new 52-week highs today. First is a buy on Jubilant FoodWorks. Good momentum here. Stock making new 52-week hikes. Stop loss now reversed at 732, target price of 750. Second is a buy on Coromandel International. The stock has hit new highs. Clearly an outperformer in the fertilizer space. Stop loss at 1900, target price of 1980.
Aditya, what about your buy today, sell tomorrow ideas?
There were a couple of them, Aisha. The first one is Uno Minda. Looks very interesting to me, has entered into consolidation, just breaking out of the consolidation. Looks like a cup and handle breakout. On the upside, for a target of 1200, I'll buy the stock, stop loss on the downside, close to about 1020. The second stock is Ipca Laboratories. I think this is also entering into an all-time high territory. So at current levels, I'll be a buyer for a target of 1800 on the upside with a stop loss on the downside at 1650.
All right, so all buys coming in from our experts at this point in time, but interesting names there. Stock like Jubilant Foodwork as well as Ipca Labs are making up to the list, and BTST ideas from our experts. But Mr. Pashupati, wanted to have your take on some of these pockets that have showing good moves of late. Stocks like railways as well as defense counters are seem to be getting back in charge. But given the kind of run-up that we have already seen and also the kind of correction from those higher levels, what is your sense that for this particular year, because we just have budget 1 month away, do you believe that these stocks could do better even from these levels?
I think the government is committed to spending in in this whole sector, whether it's defense, whether it's infrastructure, which is primarily getting spent on railway infrastructure, I think. So, I actually went and saw the hole in the ground that is going to be the bullet train from Mumbai to Ahmedabad, and it looks pretty impressive and looks like it's going to be ready pretty soon. So these are all, good steps for India's development, and they're all good, and the government is fueling it, that's for sure. There's not much private investment in these companies, but then obviously they get benefit from getting their suppliers to this growth, and I think that's also where we should be looking for really to make money.
All right, so that's the take on some of these counters, the defense as well as railway pack, because Mr. Pashupati believed that the government is actually committed for more spending, and he also shared his take. But moving on, and stock like Voltas is also doing pretty well for itself, because it's a 3% jump is what we are seeing. And very interesting to note that as the company manufactures AC, it's mostly the winter season that always has done well for Voltas as per my observations. But Naresh, any take on Voltas after almost 2 to 3% jump on an intraday basis? Is the stock ripe for more up move from these levels?
So the momentum is strong, but the sector overall has not been doing great. So Voltas looks interesting, but I would give it a pass purely for the reason that the sector is not doing well. And the stock over the last 1 year has done phenomenal. Say from 850 odd levels, the stock is at 1800. So at current levels, there could be false starts and multiple resistances around 1900 odd levels. So the risk reward is not great.
Okay, that's the take coming in on some of these good plays. But all eyes will also be on AMFI's semi-annual categorization as well, where the final official list is going to be out in the next 3 to 4 working days. Sharad is here with a list of the potential changes that could come about. Sharad?
Well, yes, this is Nuvama's final list coming in when it comes to AMFI's semi-annual categorization of stocks. And interestingly, the important thing is this would be applicable from February onwards, and the announcement is likely to come in the next 3 to 4 days. Now, I'll just give you a word of caution that there is no expected outflows or inflows coming from these categorizations, but this helps as an aid to the domestic fund managers. But now let's look at the names, the interesting potential large cap entrants. If you look at it, they include CG Power, RVNL, ICICI Pru, and also the newly listed companies such as Hyundai Motors, Bajaj Housing Finance, and even Swiggy and NTPC Green coming to the list. Now, the stocks which can move from the large cap to the mid cap segment, this stocks include NHPC, IDBI Bank, BHEL, JSPL, and even Mankind Pharma and Apollo Hospital Enterprises. The potential mid-cap entrants, that's interesting list. Over here we have 361 WAM, Keynes Tech, ABFRL, Premier Energies, which is a new listing, and also Vishal Megamart and Ola Electric Mobility, which may be classified as a mid-cap. Now, there are certain stocks which might move from the mid-cap to the small-cap category, and these names include ITI, Delivery, Poonawalla FinCorp, Global Health, Gland Pharma, and also Bandhan Bank and Star Health.
So we are waiting for AMFI's, the changes that AMFI is going to make, and some of these stocks we just discussed. But on the bottom of your screen, you will see that the substay for DAP has been hiked by ₹175 per bag, and this particular hike has been coming after 4 years. And our reporter Prakash Priyadarshi was right on the top of this particular news, and that's a confirmation that we are getting at this point in time. A lot of discussion we have already done on these names and stocks stocks are also doing well for today. But before we wrap up, good to see that the markets on the first day of 2020 calendar year 2025 has been holding up well. It's a green end to the markets because 120 point of gain on Nifty 50, more than 200 points of gain coming in on Bank Nifty, and both of these indices are seen to be supporting their crucial support levels at the bottom. But stock like Bajaj Finance is also lending support, almost a 2% gain coming in on this one. And Naresh, since you have been tracking and you closely track all these large cap names, so your take on Bajaj Finance, can this also be a good BTST idea?
Call that one because the stock has been very sideways for the last many months. So if you go back to the prices, it was at 7,000 back in 2021, 22, 23, 24. So it's been around that 7,000 plus minus 200, 300 points. So not really a great trading range. And so for now, it would still be a trade where you want to avoid.
We'll let our experts go on that note. Naresh, Aditya, good to have you guys as always. And Pashupati, just a word of advice, patience pays in the market. So don't try and get out, hopefully, of the stocks that you've caught at the bottom too soon. But let me hand it over to Snehi and wind up how 2025 has begun for us. Snehi?
Well, absolutely. We're looking at a good start, at least for 2025 for us, because you have Nifty at 23,767, looking good above the 23,750 mark, a 125 point uptick coming in, or rather 0.5% uptick coming in on the Nifty on an intraday basis. Nifty, let's take a look at Sensex, because Sensex also up 0.6%, looking good above 78,600 thereabout levels. So very good move coming in on Sensex as well. Advance decline ratio steeply in the favor of the advances, so we're looking comfortable at least on that front. So looking very good over there as well. But let's also take a look at the broader markets, because Nifty mid-cap has been rather lackluster in today's trade, but it's good recovery on that index as well. 0.5% uptick, but it's been the day of the small caps today, because small cap index has through and through outperformed the benchmarks today, and even right now continues to do that. A 1% uptick coming in on Nifty small cap as we speak. Looking very, very good when it comes to a bunch of these sectors. But if you take a look at some stock-specific action, it is the entire auto pack that was in focus today. Maruti Suzuki up 3%, M&M up 2.5%. A bunch of these stocks have done well. What did not do well today was Escorts Kubota on the back of a weak set of numbers coming in. Escorts and Bajaj Auto have missed street expectations. Hyundai largely in line. M&M has been the real outperformer. That stock has done wonderfully. Eicher and Maruti Suzuki also have been doing pretty well in today's trading session after recording a beat on what the street was expecting on the monthly auto sales numbers. A few other counters in focus: Bajaj Finance, L&T, Eicher, Tata Motors, CPCL, they have been holding up the index smartly. What did not do well today was Hindalco, Adani Ports, ONGC, Dr. Reddy's and Tata Steel, all trading with cuts of about 1%. Let's take a look at some sectoral gainers and losers. Through and through, day of autos coming in, followed by media, energy, Nifty, bank, FMCG, pharma, IT. Most of these sectors have ended the day in the green. However, what's not done well today, by and large, is the entire Nifty realty space, because cuts of more than 1% coming in. Nifty metal also rather lackluster, very flat in today's trading session. From the realty space, Phoenix, Prestige, Lodha, Oberoi, Sobha, Godrej Properties, all of these have been under immense pressure in today's trading session. Lastly, a few more stocks to watch out for. Tata Chemicals, HSBC has come out with a reduced target price 820, so that stock was lower today. Ireda on the back of business update, very good move coming in. Same can be said for Karur Vyasa on the back of order wins. NCC and Kalpataru projects for two stocks in focus today. Well, yes, that's how we're wrapping up today's trading session. Looking good above 23,750. 0.5% uptick coming in for Nifty. Day one of calendar year 2025 looking good so far. Let's hope for this rally to continue going ahead.